Welcome to Rising Edge TV, your DNO channel. Today, we will reopen another of our DNO files. We will do this with Owen Dacey from Rising Edge, our general counsel, head of claims, podcast master. Swifty, Jonathan Swift of the Insurance Post, well-known journalist in our industry. And Ed Smerton, the founder of Coverage Matters, because coverage does matter, particularly when it comes to DNO, which is your area of expertise. To the three of you, thank you for being here today. I am Philippe Gouraud, the CEO of Rising Edge, and I am honored to be able to open this file today of Patisserie Valerie, Valerie Patisserie, going from sweet to sour. So, Ed, do we actually know what happened?
We don't actually know what happened. We know some things. We know that the Patisserie Valerie business appeared very successful. Indeed, it outperformed most of its competitors, and then suddenly went bust. So we know that much, and we also know that several individuals are now awaiting trial on fraud charges. So we know that there is a suspicion that the collapse was caused by fraud, and we also know that the auditors were fined and were subsequently sued and settled their civil liability case that was brought by the liquidators or the administrators of Patisserie Valerie. So those are facts. We know that much. What exactly happened, we don't know. But consistently, the view expressed in the press and by the SFO has been that the cash position in the firm was materially overstated on a serial basis over a number of years. And the balloon went up in October of 2018. Interestingly, it is also a fact that a number of the members of the board sold large amounts of shares just before this happened. And so, you connect all of those dots up, you think there must be something in this, but we don't know exactly if there was a fraud, how it was done, and we don't know exactly who is guilty of the fraud. So, there are obviously suspicions.
So, Ed, we will have to work really hard in this podcast because so far you're telling us we know nothing. So let's try to dig a little bit more. Let's now turn to our investigative journalist. So, Swifty, enlighten us. What can we find out here?
Well, Philippe, I can actually tell you that when my wife and I got married, we actually had a Patisserie Valerie cake in 2004 from, I think it was their flagship branch in Soho. I remember having to get the car over to Soho to pick up this bloody cake. And then it was one of those issues where we were going on a honeymoon the next day and you end up with like the cake left over and it was this thing full of cream and it was like, it stank the house. I put it in the bin. Anyway, on to this case, away from those trivial matters. Yeah, I think, as Ed mentioned, there are a few interesting things, there are a few pointers. It's always that thing. And we've talked about this before in some of these other kind of episodes here, or we will talk about it, when things are too good to be true. And I think Ed mentioned it. At the time, Patisserie Valerie seemed to be outperforming its peers at such a level that probably should have raised some kind of suspicions, because it was, it's a high street kind of cafe cake shop. And you look at the kind of other its rivals, I think some people mentioned the whatever they were, but they were just, obviously they were so much. It was so outperforming them by so much. It seemed that this was incredible. It really was basically doing excellently. And so it either had found the secret sauce in the world of high street kind of baking, or something was perhaps awry. And the selling of shares is always, it seems to be something that kind of perhaps there's a bit whiffy when senior members of staff are selling kind of quite considerable amounts of shares at certain points, at the time. But this is a kind of an organisation, and the collapse was very speedy here. It literally went from suddenly there were some issues that they might be materially overstating their profits to it's suddenly it's in liquidation. It literally it went pop very, very quickly. So like Ed said, and we now know the SFO's obviously investigated it. There are 4 people that are potentially kind of brought to book on this, but the 4 people that have been mentioned, they're not the top senior brass here. I think it's the CFO, Chris Marsh, his wife, and 2 financial controller and a perhaps consultant. So yeah, it'll be very interesting to see how it progresses. It'll be very interesting to see what charges they face. When I think the
But in this case, is it a case where actually money was missing, so they were making up actually because the money was diverted elsewhere, or were they just trying to kind of make up that there was more money than there really was to try to kind of like cover up the fact that that business was actually not as successful? Oh, and
It's a great question. I think that's the key question. I don't think we know, and I think maybe this will come out in the SFO, in the trial that's happening with the SFO next year. I do think there's so many contradictory things going on, because you have, like with the insiders trading or sell-offs just before this all kind of comes out, but then you have the people who are involved now in the SFO are not those people, they're other people. And there's quite a famous founder, the CEO chair in this case. He's not there, and he's basically saying, I was defrauded, I was lied to.
Luke Johnson.
Luke Johnson, that's it. Thanks, Ed. Yeah. But and also some of the sellers were non-executive directors as well with their shares. There's so much unknown still here. But
what is really interesting is that, there's so much interesting there. But this is a UK case. We have opened a few cases in this series that tended to be kind of like international high-profile cases. But this is really close to home, right? So that is happening on the shores here.
It's just a good old-fashioned English accounting fraud. This is. We have them occasionally. I'm not saying it's a good thing. It's a terrible thing for the people involved. But Carillion, there's been no proof of fraud in Carillion, but Carillion was an egregious case and still isn't finished. And there may still be more news on Carillion. But, there are overtones of Carillion here as well, and we have other collapse of independence. I remember that back in 2001. Independent insurance was a doyen of the insurance market. It went from AAA status to junk in a matter of weeks. And again, that was overstatement of profits. Tesco was an accounting fraud, was an alleged accounting fraud. It's covering up performance that seems to be not necessarily theft. It's just covering up poor performance, or overstating performance that seems to be the driver.
But that is, you use the example of independent insurance. Again, those in the market would have said it was too good to be true. To my point about Patisserie Valerie, why was it outperforming the rest of the market?
Yes.
Independent insurance at the time was outperforming the rest of the market. And, to an outside investor, it looked like this was the best performing insurance company in the UK at the time. When actually those in the market, and you talk to brokers and competitors, they were always very wary about what was going on. And I'm sure if we'd been in the baking trade at the time, we might have been going, this just doesn't stack up. How are they selling more cakes than we are? What's so different about their buns and eclairs, etc., etc.
We will address in a review in terms of the implication from a D&O insurance policy standpoint, in terms of how a policy responds in similar cases or does not respond in similar cases, and also from a corporate governance standpoint. But before we get there, as often with these cases, because they seem kind of like, as the American would say, Monday morning quarterbacking, or kind of like how did that not come up? Indeed, Swifty, you said in terms of like all the competitors that this cannot be right? So what about the auditors? What about the even in the supply chain? People supplying that business, you would want to do some counterparty risk management and saying kind of like, are these guys really going to be able to pay me? They seem to be way too successful, or right? So how did it not emerge sooner? And what was a trigger point that actually made it appear then? When did the cake crack?
It was, I believe it was an HMRC liability, basically, that came in, and it was £1.4 million, I think. And at that point, that kick-started it, because the money wasn't there to pay the liabilities of HMRC. I think all those things you're talking about, Philippe, as well. There were stories as well that come out now of people turning up to offices with baseball bats because they hadn't been paid. And I think that will actually come back to the culture of the business, because how on earth were things like that not feeding their way up to the top? Because if they had, maybe they would have aroused some sort of suspicion or at least questioning of what was going on, which was, as everyone said, the turnover or the EBITDA or the profit just literally doing the most perfect. If you look at it, it's like a perfect diagonal. So yeah.
So now let's turn to kind of like a D&O insurance in terms of like how did the policy or how would a policy respond to similar cases. So what are the allegations here? Ed, I mean, maybe we can start with this, and then Owen, you can tell us how a policy would respond.
So it looks as though there weren't any civil claims against directors. It's purely a criminal matter, as far as I can tell. I'm sure it was a listed company. It was an AIM-listed company, so there would have been some regulatory fallout afterwards. But really, this is all about, in terms of the D&O, it's really all about the criminal charges, isn't it? The individuals involved in that, and I think that there were originally 6 individuals arrested, and it's now boiled down to 4 people being charged. But at the beginning, there would have been a lot more people interviewed by the SFO and by the police. So all of those people would have been drawn into that investigation, and there would have been an immediate question about who, if not all of them, would have been covered under the policy for that. What investigators tend to do is they start with the junior staff first. The clerks, the accounting clerk, they ask them about their bosses, and they start to build a case against the senior people by starting at the bottom and working up. And they split people up. They make it hard for you to, communicate with the other people involved. And that's probably quite a frightening time for individuals who had nothing to really fear, but who didn't want to say the wrong thing either, and might worry that they are going to be accused of something. So there is going to be a lot of interest in those individuals being able to represent themselves properly in those interviews. And it is possible that if you say the wrong thing in one of those interviews, it can lead down a very dark road. So representation is incredibly important, and that's the D&O policy. Yeah.
Do a D&O policy ensure the clerk that is being called and require some...
Good question. I think every D&O policy is different on this, but I think generally speaking, what we see in the market is the definition of an insured person in the policy is expanded beyond just the main executives, and it will reach out to employees as well, but only really to the extent they're acting in some sort of managerial or supervisory capacity is generally the position. So for a clerk who's just doing invoices, maybe not. In this case, I don't know, but
and there wouldn't have been any indemnification because the company was insolvent. So it's a classic side A, what we call a side A situation, company going bust. It's the side A is the individual cover for the directors under the policy. So absent indemnification, that's where you want to go. And so, as you say, it might have been tricky for some people to get the cover. What insurers might have done in that situation is taken the view that although some are definitely covered and some probably aren't covered, it's actually in everyone's interest that they're all covered. So they give the cover, possibly with some sort of financial sort of limits, but they give cover to people so that they can get properly represented. Because in the end, it's in the insurer's interest that they're all properly represented, because it will hopefully reduce the chances of charges and it becoming a lot more expensive.
But once again, I suppose if you start with the junior staff, starting to rack up legal expenses, then middle management, then senior management, then executives, by the time you get to kind of the non-execs, there might be nothing left in the policy to pay for their defense costs.
Another classic example, I think, again, because it's so unclear, it's going to bring in that wide net of people. And yes, there will be conflicts, and there will be people who say, no, actually, I want my own. I'm not going with whichever firm. They might have one firm that deals with all the lower down. I've seen that on cases involving a bank.
But with criminal, there is a greater suspicion of conflicts of interest between individuals, isn't there? And so, you, like you were saying, there is a bigger risk that the policy will be burned by multiple people separately because they can't share representation. It's a real risk in criminal.
And so that will have all kicked off, and I'm sure there would have been lots of costs there. You then have the people who are left in the SFO proceeding continuing to incur costs that may or may not be being covered under a D&O policy. But what we have seen in the UK, and it hasn't happened in this case, is there a potential shareholder claim still out there? Because what we've seen in other cases is that in some cases they'll wait for the SFO to do all the hard work, they'll await that outcome, and if it's favourable to the case, then that's the point at which you might see a shareholder claim, and that could be that'll be 7-8 years after.
Because the company went into administration, it did go bust, but then there was a management buyout subsequently, and it's still trading. The company is still trading. It's much smaller than it was, but it's still trading. So that's quite an interesting question.
Yeah.
Is there still going to be a civil
and for
claim?
for the directors that were there as well? Or did they miss? Especially in that second round of they were trying to raise funds, weren't they, when it was initially getting into trouble? What representations were made then around what was known or what the position was? Yeah.
Swifty, would you still buy cakes there?
No, I think my days of cake buying. No. Yeah, if I was to get married today, I think I'd have a Patisserie Valerie cake. But no, I mean, like I said, it's still on the high street. I think there's something interesting here about, because again, it's a business that on the outward was doing very well, and I was wondering, I know that reading around this case, people said about the non-executives, again, they didn't spot it, and I was wondering about non-executives coming into what looks like perhaps a cushy role, because you think in Patisserie Valerie, like I said, the profits going like that, this is quite a nice little role. I can
Free cake.
I can have my cake and eat it too, it is literally to that, and you of course think it's that kind of warning for kind of people who are taking non-executive positions to perhaps delve a bit kind of deeper into the positions they're taking. And I think people mentioned, again, reading around this case, that there didn't seem to be any kind of whistleblowing kind of facility or any kind of way that anyone staff who were suspicious could have raised any concerns upward. And again, that I think was quite an interesting aspect reading around this Patisserie Valerie case. So,
yeah, the thing that surprised me is that the administrators went after the auditors and didn't go after the directors at all. And the auditors would have defended the case on the basis that the directors were committing fraud, and they shouldn't be responsible for that. And it's an interesting dynamic as to why the directors weren't drawn into that, or quite often the auditor, if it's sued, will then join the directors. That happened in Barings. When Barings collapsed in the 90s, that was a very dramatic case. The auditors were sued, and they third-partied the directors, because on their case depended on proving that the directors were committing fraud. So, it's an interesting one that the directors of that time, particularly given they were selling shares, it looked like it went wider than just the individuals who were being prosecuted. Why nothing's being said about them? And it does lead one to sort of query whether it's about the D&O policy and about whether there's enough cover there, whether it's even worth going after them. I don't know.
I mean, you could take. I mean, obviously, the SFO has had its own kind of perhaps kind of issues, perhaps in terms of publicity, in terms of cases that have collapsed, and you always wonder whether they go after the certainties rather than trying to spread the case too far. They might think it might be a bit too difficult. There could be people there they're just not so certain about, and they'd rather go after the certainties than the uncertainties, or so to actually get a win and a notch under their belt, which is ultimately what they're looking for.
They haven't got off to a great start. I mean, it took them 5 years to charge anyone. This isn't looking great, and there's still a couple of years nearly 2 years to go before there's going to be a trial. It could collapse before. It's still possible it could collapse based on history.
Back to the auditors, because when something goes wrong, you always try to find kind of like someone who should have known sooner, etc. And then it's easy then to start with the auditors. Are auditors' role to spot fraud or just to spot the accuracy of what is presented to them as being the facts?
I think if you asked an auditor, they would say they're not there to spot the fraud. I mean, they're as much a victim, if you like, as the directors were, in terms of if someone's deliberately withholding or hiding or making something up, that's not their role. Like you say, it's the latter, basically, to be checking things kind of match up. But then I still think, that apparently the holes, the extent of the holes in the invoicing, in the financial records seems to be quite astonishing in this case, and it is kind of surprising that wasn't.
And they were fined. They were fined in the end, the auditors, by the FRC. The FRC is the regulator of corporate governance regulator and regulates auditors, and they were fined 2.3 million. So it's for audit failure. So the FRC doesn't seem to think that the auditors aren't responsible for spotting fraud. At least I think it's difficult probably to separate in certain cases. a black hole in the accounts, they should be able to spot a black hole in the accounts. And if it's that black hole has been caused by fraud, it doesn't really matter what the cause was, but they should have spotted the black hole in the accounts. Isn't that really where you end up with this?
Right.
And it might or might not have been fraud. And of course, it still hasn't been proven. So we don't know yet for certain whether it was fraud, do we?
No.
We just don't, which is extraordinary in a way.
So when you look at this case, Owen, from through the lenses of a DNO claims expert, is there any kind of like salient point that comes out that should be kind of raising a flag in terms of things to look out for?
Yeah. Well, I think that the first one, again, it comes back to in these cases, going to be multiple people trying to access a single policy. So the limits point around, are there sufficient limits? I think it's another good example of an SFO case taking a very, very, very long time. 5-6 years of this, like we say, we don't know. There's nothing been proven yet, but that's hanging over some individual's head for 5-6 years. So again, having the support and the expenses paid under a DNA policy is critical. I'd also say, actually we have individuals here that aren't actually being dragged in, and they may be witnesses, or I've heard Luke Johnson say that there was someone alluded to that he might be a witness in the end. But yes, they may have had the support of a DNA policy, and it may have helped them defend themselves, and they're no longer part of the investigation. So again, it might be a good example of showing the importance of the cover.
And what about from a corporate governance standpoint? Where were the failures in this instance?
I think one we've touched on already, which is the culture and the reporting up. Was there a whistleblowing process in place? Because it does sound like there were people noticing things that were happening, late payment of invoices, etc. But the other one, that there was an interesting one that came out with the chairman as well, in terms of I think he had something like 17 other roles that he was in at the other time. And I think he's been quite, he's publicly come out and talked about this in terms of, a bit of a bruised ego after this, and that perhaps having that multi-hatting in various places can be a risk too when it comes to corporate governance. How on earth can you have all of your eyes and hands on 17, 18 different companies at the same time?
And then there was a point, of course, that Swifty, you raised in terms of who still wants to be an NED, a non-exec director in corporate in general, but UK corporate specifically.
Yeah, I think there was an old view of it. I don't know, a few decades ago, that the role of a NED was actually quite a bit of a post-retirement easy job. And I think modern corporate world tells you this is far from true, and you really have to take this very seriously. If you want to take a NED role very seriously, you've got to basically limit yourself to so many. You can't go to Owen's point with the kind of chairman. You can't suddenly be having 17 different roles, because that's way too many. How can you have oversight of all these businesses, which are going to be in various, could be all over, many different industries, many different sectors. And again, I know people like to specialise perhaps, but it is, you've got to really kind of focus on what you're doing. And I think, if you were going to take, you've really got to take the role of NED seriously. I mean, that's been proven, I think, in recent years. You have to basically make sure, do your due diligence and know what you're taking over is as it is sold.
Yeah, when Independent collapsed, it was the execs who went to prison, and it was the non-exec chairman who was sued.
Yeah,
and that tells you something about the way the roles, can pan out. And I think, of course, a NED can't spot complex fraud. It's unlikely to spot a complex fraud. The audit committee is unlikely to. If the auditors aren't spotting it, they're not spotting it. But if the fraudster is absolutely hell-bent on hiding it and is right in the middle of the finances of the company, so they know how to hide it, then it does become much more difficult for NEDs. And it doesn't help them if they've got lots of roles. If they actually do appear to be devoting enough time to the company, then they're not vulnerable to an accusation that they didn't really have and spend enough time just looking into that. Another governance query might be that the auditors have been the auditors for 12 years. That doesn't jump out to me as being a ridiculously long period. I think the Carillion auditors were in place for a lot longer than that. And that was a red flag in that case. But 12 is still perhaps, on the longish side. And is there a point beyond which the auditor starts to become institutionalized with the company, and isn't quite as diligent as perhaps they are in year 1 or 2,
Especially if it's the same auditing partner, I would imagine.
Yes, exactly. And if they're selling other services to that company, which they might well be.
And I think actually all of this takes us back to, look, it's extremely difficult for someone at the top level to be spotting a fraud. So it comes back to having a process in which in place, because there will be people lower down who are suspicious or aware just because they're more on the front line. So having that process for it to feed up, I think, is what comes out for me.
I think that there is something really interesting that is currently developing is actually through the use of data. So, I mean, certainly at Rising Edge, we put a lot of emphasis on data and analytics when we look at our underwriting model, our pricing model, our portfolio management. And so we're quite curious in terms of what's happening in the space of data science. And you would be really surprised in terms of the development that are taking place in predictive modeling, including for accounting fraud, whether deliberate or not, or misrepresentation. There is now access to so much data and the ability to handle that data, that models are being built to actually predictively determine that the likelihood of a company committing accounting misrepresentation or accounting fraud. So I think to the fraudsters out there, watch. AI and large language models are coming after you. But I think it's a really interesting development, since auditors are washing their hands of identifying fraud, since maybe NEDs and boards are not kind of fully equipped or have the information to do this. Maybe data is coming to the rescue. So on this, in terms of like a closing remarks on this particular D&O file, couple takeaways, Ed.
I was quite interested in the fact that the police called their investigation Operation Venom, which doesn't have any kind of cake connotation at all. So there's an opportunity missed there, I think. That was probably one of my main takeaways from it. Now, I'm being flippant, obviously. I think unfortunately, this is the kind of thing that does from time to time happen. And the auditors always are the first people who get blamed when there's an accounting fraud. And, we don't know for certain if there was an accounting fraud. There's a smell of fraud about the thing. A lot of the circumstantial evidence points in that direction. The corporate governance doesn't appear to have been there. But what really strikes me about this case is how there wasn't really a balloon going up. It's just that they couldn't pay that last bill. It just like fizzled. It just ran out of cash. It wasn't like somebody whistle blew. It wasn't as though a regulator swooped in. It wasn't a press article that sort of set things off. It was simply they couldn't pay a bill, but their accounts seemed to show that they should have been able to pay that bill. That's it. And it just
But
it
again,
just ran out.
if you're the bank of a business, that actually, when you look at this, it's like I have a lot of cash, but I'm the bank, and I see the accounts kind of going towards zero. I'll be either worried or I'll say, who in hell are you banking with? Because I thought I was your bank, right?
Yeah.
I mean,
Didn't they have one of those hidden bank accounts that have been since revealed?
Well, I think that is also, because of the group structure, I think they had ways of netting off certain liabilities. So it was hidden basically from the bank. Or if you were looking at it from that perspective, you might not notice it either.
But cash is cash, Owen.
Oh, yeah, well, true, yeah.
So it's like, where is my cash?
The cash?
That's my question.
Business is apparently so successful. Where is the cash? Yeah, exactly. But I think, and we saw this with Carillion as well, after the event, it is easy to see all the red flags. And you have banks and you have accountants and you have people who work internally, and you may have regulators. Somehow they all miss it because they all saw one thing, but they didn't see all the things. They didn't see all the things. So no one sort of blows the whistle on it. And if it's fraud, then of course they've got an interest. Fraudster has an interest in making sure those people don't know all the story. So
But I think it's to Philip's point, though. The amount of analytics data out there is now. You wonder if this was today, would there be more would people be questioning it more? Would those things be kind of flashing up on more people's kind of radars as potentially?
That's right. You can identify much faster and easily correlations, and through these correlations, where are the anomalies, right? I mean, and then using historical data to kind of like look back and say, same facts have the same consequences, type approach, and saying, now these were the early signs that we did not see. So now you see these early signs. Now you know the likelihood, the probability of something wrong happening. But Swifty, you seem to kind of like your key takeaway seems to be more for non-execs there.
Well, no, I think that's one takeaway. I think it's been mentioned. I think really the SFO. This is something. It'll be interesting to see how the SFO case goes, because I do think they need. This would be a good win for them, because it's one of those things where it does take so long, and I think people are out there, and they'll suddenly remember if the case does come around. I think March 2026, and it happens. It hasn't fallen apart by then. They'll suddenly go, yeah, Patisserie Valerie, yeah, that's I remember now, and but then they'll probably wonder, wasn't that in? And the fact it was so long ago, and that probably will get them thinking, why does it take so long? Because let's say nothing's been proven, but this does look. It doesn't look like perhaps the most complex case. This does look. I think Ed mentioned earlier. This kind of thing happens. It's unfortunate these things happen, and it isn't actually. I mean, some of the kind of the details and the ingredients are obviously very interesting, but this is kind of something that this does happen. On an annual basis in UK corporate life.
So, and from your standpoint, I mean, we're looking here in these DNO file series on kind of high-profile cases. They have as a common denominator, they are high-profile, but also, as it was just pointed out, they're a little bit old, right? And because it takes time to kind of like develop, evolve, etc. What is it you're seeing, kind of like more having the pulse on what's happening today in terms of like the increased regulatory and environment, whether it's the FRC, the new code coming out, in terms of like the implementation, the expectations of shareholders on the role of NEDs and all this. I mean, are there some lessons to be learned from cases that might be old in the context of what is happening today?
Yeah, I think one of the key learnings that comes out for me is for people that are in these roles now, are in these cases like Patisserie Valerie, is the speed of the collapse. Okay, so there might have been a way of, and I know it got bought in the end by private equity, I think, but there might have been a way of saving that company, or if they'd had a bit more time or spotted it earlier. And so I think that just comes back to corporate governance and business resilience, because again, a common denominator is just some sort of event that, or a liquidity thing, or a bill they can't pay that happens, and that's caused the whole company to fall apart in the space of weeks. And so I think that's the key thing. And what's happening now? What's there is a lot of insolvency happening. There is a lot of companies that are struggling financially because of the current trading environment they find themselves in, and at the same time, all of the regulators out there in the UK, US, wherever it is, are ramping up in terms of looking for individual accountability in these situations. So I don't want to be a completely. I have a different view on life, because I deal with these things every day, and I could be quite maybe a negative view on it all. But yeah, it's a very, very challenging environment to be a director at the moment, I think
one of the recent development also that we have observed, which is a source of, I would say, of worry for directors of businesses that are going insolvent, is a trend of litigation funding liquidators to actually go after the assets of the directors of the failed business. Yeah. So this new trend would really worry me a lot if I were in a director position of a business I don't manage. I'm fairly comfortable with Rising Edge. But on a serious note, I would be kind of really wanting to know more about the finance, more about the governance, more about my DNO policy. So if you're listening, here are a few tips for you, directors of the world. So I want to thank my panel here, Ed, Swifty, Owen, thank you so much for the insight on this case. We started it by saying that we did not know much about it. I hope that we're coming out and that we had some takeaways in terms of like how to advise your clients or as a director what to look for. So with this being said, I'm closing this file and I look forward to seeing you at the next episode. Thank you.